So Meghan, you're one of my favorite persons.
Thank you.
Last time you spoke was Energy Week 2022, two years ago. A lot has happened since. You've been busy. You've raised and set up a fund of $1.4 billion. You have a great team of 25 people. It's not your first rodeo, but still. Is there any best practices you want to share here for maybe for the investors, but also the entrepreneurs?
Absolutely. So, and that's right. Last time we spoke, I'd taken this leap and had quite a career change in front of me. And, first-time teams, first-time funds, they're really hard, right? To get that first fund raised. There's a lot of LPs that won't even invest in first-time teams, first-time funds. They're like, well, wait till fund 2, right? And we were raising in 2022, 2023. I don't have to tell you guys that was a rough time to raise capital. So it was a real leap of faith. Just maybe 30 seconds on what Decarbonization Partners is, because I realize not everyone in the audience might be familiar with us. Decarbonization Partners is a 50-50 JV with BlackRock and Temasek. It's obviously a decarbonization platform. It's in the name. So, and it's a late venture, early growth strategy. So a little bit later than what TDK does and what you heard from Larson. So our sweet spot is think Series C, Series D, $50 to $100 million per company. And if you think about it, that $1.4 billion, we expect that to translate with co-invest. All right, we might end up investing about $2 billion with co-invest from our LPs, and that will represent about 20 companies in our portfolio. We look for companies that are technology de-risked, have strong customer traction. We'll talk about that a little bit more. Corporates are a really important part of the decarbonization story. And we also look for companies that don't rely on green premiums long-term to be successful. All right, so yes, it was this really challenging time because it was a little bit of a catch-22, right? We needed to go out, we needed to raise capital. Of course, the LPs wanted to see the team. So here I am, slowly but surely hiring a team when we don't have the capital, pulling these brilliant individuals out of great jobs, right? Talk about me not sleeping at night, me sitting there going, oh my God, I've just made all these people leave their jobs so we don't have our fund raised. I think what gave us a safety net, and this is a learning, and you can't always get it done, but it's a huge learning. BlackRock and Temasek gave us $300 million in seed capital. That allowed us to confidently start hiring a small team, and we were able to deploy that capital into our first 4 investments. So that was so important for LPs because the strategy just wasn't on a page, right? We could actually talk about the first 4 investments and bring that strategy to life. So gradually in 2022, 2023, we did successfully raise $1.4 billion. We had actually targeted $700 million. We wanted to hit the $1 billion mark with $300 million from Temasek and BlackRock. So we were thrilled that we overhit that goal. And we raised the entire team, and the entire team is in place now. As you say, it's about 29 people across the globe. We have 5 people in Singapore representing our Temasek connections. We have a big team in London, and then here in the US, we have people in New York, Houston, and San Francisco. It's a very diverse team. Of that 29 people, I think we represent 20 nationalities. We speak 19 languages, 40% women. A big appeal to me of taking this role was the opportunity to build a fit-for-purpose team to deliver on this strategy, and that was super exciting. But I will admit, I'm very glad to be here on this side of all that. Fund is raised, team is in place, first 9 investments. It's good. It's good.
Okay, I will mention about Fund 2 later. Actually, I want to double-click on the team because it's not your first rodeo, like I said earlier, but you're very good at recruiting amazing people. Any tip for the audience about how do you recruit? And how do you recruit for such good diversity of thought?
First and foremost, we hired extraordinary investors with deep investing expertise in the stage and sector relevant to decarbonization, all right? But I always like to say, they all have ands, okay? So we have a team that represents deep investment experience. They also have technology expertise. So we have engineers on our team. We have PhDs in material science. We have, aerospace engineers. So we have a fair amount of technical expertise as well. We also have operational experience. For those of you in the audience that are investors but have spent time on the other side in a startup in an operating role, I know that for me that changed my life as an investor and board member. At some point I went to work for Beyond Limits as their COO. And when I went back to the investing world, just how I show up in the boardroom and how I think about investing, having that operational experience was a fundamental game changer in my life. So I really respect that in the people that we hired. We have Kojo, who spent time in Google X in CFO roles, for example. Everyone's an investor, but then we have that technical experience and operational experience as well. And I think that was key. So that was what we were looking for. Mm-hmm. The other part of your question is, how did we recruit them?
Yep.
So by definition, we found people passionate about our dual purpose. So we're a dual purpose fund at Decarbonization Partners. Returns first, 20% IRR from a portfolio view. But we also have to have a measurable and meaningful decarbonization impact in every investment that we make. And that's a bottoms-up approach. It's entirely data-driven. Now, granted, the error bars are large, but the point is we do the work, and we do a lot of work to come up with those decarbonization outcome measurements. And that goes into our quarterly reports in the same way that the financial returns do. So by definition, we hired people that were excited and passionate about that dual purpose. Often the individuals that we hired, they were in funds where they were focused on perhaps decarbonization investments or had made some, but they were in more general funds and they wanted to come to a fund that was dedicated to a decarbonization strategy. So it was really finding people that were passionate about what we wanted to do. We also looked for people that understood that this was a platform beyond Fund 1. When they hired me, BlackRock and Temasek made clear that this was a minimum of 3 sequential funds and that we were building a business together. So in some ways, we hired people that were very entrepreneurial themselves with a founder mentality because we're building a business. We're building Decarbonization Partners. It's not a fund, it's a business. And we wanted people that were interested in being business builders.
Which is a commitment of 15, 20 years.
Exactly. Exactly.
Yeah.
So when we hired people, we looked each other in the eyes and said, is this someone I want to work with for the next 15, 20 years? Because that's exactly right. That's the exciting piece of it. The other thing that we really looked for is, no assholes. You can't work with assholes for 15 or 20 years. So
not even 1 year.
No, exactly. So we just hired nice people that we want to get along with. Now, are we all the same? Are we all best friends? No. But some of us are best friends. Some of us are quite close, right? Not everyone has perfect chemistry with everyone else, but that's the nature of diversity. You want a diverse team, and you're gonna have a little bit of difference of opinion, and dare I say, a little bit of conflict, especially in the early days. There's an interesting set of data about diverse teams, and that's really diverse teams in the early days actually underperform in the early days their non-diverse counterparts because there is so much conflict. But then once you figure out your ways of working and how to manage and communicate through that conflict, that's when those diverse teams truly outcompete their non-diverse counterparts. So again, you don't have to all be best friends, but it does need to be warm, you need to get along, no assholes. And having said all that, we do spend a fair amount of time together and we do really enjoy each other as a team.
Now, I'm going to challenge you because you have a great team, and yet you've been very busy. You made 4 investments with your seed capital. You have made 9 investments now. So actually, you're already deploying and in great companies. Can you talk about how did you manage to get started so quickly with a small team, recruit a team so quickly also, which is so good, but getting 9 investments? And this is really big checks as well. Maybe you can talk also about the check size.
So again, 50 to 100 million. Of decarb, we want to cap per company 100 million. And what I mean by that is we can go more than that with co-invest. But for our dollars, just from a portfolio diversification point of view and the amount of capital that we have, and if we're targeting 15 to 20 companies, hopefully a little closer to 20, it's 50 to 100, right? Some companies will hit 100, maybe a little bit more with co-invest. And some companies, we might be 50 to 75. We really in the lifetime of a company don't want to be below 50, because then that gets really weird, right? The return on capital is so much higher than the companies that you have in 100 million. So we really focus on that 50 to 100 million in our sweet spot. We are deploying quickly. And what I would say is we'll probably, I can't even say this, I want to faint, Eric and I, we'll probably be out softly for Fund 2 back into 2025 with the first close early 2026 with our rate of deployment. Because we're at 9 now, we're about to close 10 in November, and we'll probably have 11, or we could actually be at 12 by the end of this year. So we're not in a hurry to deploy capital. And in fact, even for Fund 2, I never want to raise a mega fund for the stage that we're investing in. When you raise larger funds, even if you can, you don't want the team feeling pressured to deploy. You want the team to feel like they have time, they can keep the bar really high. There's no pressure to deploy fast. We just want to find the best opportunities. Every ticket matters of those 20 companies, because we're not early venture. This is not a strategy where out of 10 companies, 1 or 2 are going to return the fund and the rest are zeros. When you're deploying $100 million checks, you can't have a zero. Now, it doesn't mean that some of our companies won't deploy and that we aren't taking risk, but we expect the majority of our companies to be successful. Hopefully a couple of them are wildly successful. And then, it's kind of the opposite end of the spectrum. Maybe 1 or 2 are really, failures, even if they return some capital, right? So no rush to deploy capital. We have to be very deliberate and careful for the sectors that we're investing in.
Yeah, and we talked about taking our time to make sure this is the right risk-adjusted pricing and everything else. Now, you've talked about BlackRock, or mentioned BlackRock, Temasek. There's also GIP.
Yeah.
You're clearly building an amazing ecosystem of partners, and maybe that's Decarbonization Partners is beyond Decarbonization Partners. And we have all this challenge of first-of-a-kind financing, project financing. Can you talk about that partnerships you're building around you?
Absolutely. So maybe I'll talk about corporates for a second and tell you all a little bit about the new GIP relationship, which is going to impact us for sure in a very positive way. So I think it's really important that we acknowledge, we talked about that decarb looks for strong customer traction. What does that really mean? Corporates and strategics play such an important role in decarbonization in the sectors that we invest in. Corporates are going to be our co-invest partners. They're our customers, and we'll get back to customers. Customers are so critical for the stage that we're investing in, and that's strategics, that's corporates. They can be in the cap table, they're the potential acquirers, they're joint development partners, JV partners. And I don't have to tell you, coming from a strategic, for those of you that don't know me, I also came from a strategic. I led BP's venture capital group for a very long time, which is how we know each other.
Yes.
Strategic partners can test and trial, give feedback back to these young companies. So corporates have such an important role to play. And also in terms of that desperate customer piece, I'll get to infra funding in a moment, because I think corporates have a really important role to play between the time where we invest and when these companies are ready for infrastructure dollars. So let me say a little bit more about that. So where Decarbonization Partners plays, we don't take binary technology risk, okay? We take scale-up risk. So what does that really mean? We will invest in a company that's been running a pilot or a demo for 12 to 18 months that we can properly diligence, but now they're ready for their first commercial facility. So our dollars will often go to that first scaled facility. So we're taking engineering risk, all right? We're taking scale-up risk. Decarb's job, if we do it well, is to help these companies be able to compete for infrastructure dollars in 2 to 5 years. So the technology companies that we're investing in today are tomorrow's infrastructure companies, especially when you think about the transition and decarbonization. I think it's really important to put some numbers on that for a minute. Some of you may be familiar with them, but to reach net carbon zero by 2050, the amount of investment required is massive. It's approximately $4.5 trillion a year, every year, from now until 2050, a massive amount of investment. Now, only about half of that are things that are commercial today. So think wind, solar, and to some degree EVs. The other half, the other 50% of that $4.5 trillion a year, every year, is in nascent technologies that need to be scaled. All right, so that's really where we play. So our infrastructure colleagues in BlackRock and GIP, so for those of you that aren't familiar with GIP, that stands for Global Infrastructure Partners. They're a big infrastructure organization. BlackRock just acquired GIP. And we are actually at Decarb going to sit in that combined business with some of our BlackRock colleagues and our GIP colleagues. And the idea is this, that we're investing in these companies today, and GIP or other infrastructure colleagues, we are potentially a source of future deal flow for our infrastructure colleagues. And they, in return, are a source of future capital for our portfolio companies. And what we're already doing today is introducing, at this early stage, our portfolio companies to our infrastructure colleagues, where they're learning what do they need to do to be ready to compete for these big infrastructure dollars in 2 to 5 years, developing the relationships. I don't have to tell all of you, this business is a relationship business, right? The idea is this combined entity of BlackRock, Decarb Partners, and GIP, we're going to be able to support these companies throughout their lifetime. These different pools of capital will be able to support through different growth all the way through IPO, all right? And starting with late stage venture, early growth, which is where we are. And up and down the capital stack, there's infra debt, there is project asset level finance, there's TopCo. So up and down the capital stack and throughout the lifetime of these companies, we think it's going to be a really powerful differentiator in the market that will allow us to, frankly, source and win the best opportunities in the market. And that's what we're focused on. And by the way, what we're doing, we talked about this, Larson talked about this, what we're doing in decarbonization is really, really hard. I tell the team this all the time. We find great joy in our work. It gets us out of bed in the morning. We're passionate about what we do, but make no mistake, it is very, very hard. Our job is very, very hard. It takes a village, all different kinds of capital, including government, partnership, corporates, and these pools of capital that I just described in our business.
So I think you can understand why she's my favorite person, right? Not only she raised a 1.4 billion fund, she finds ways to multiply the impact of that fund. So it's pretty amazing. I want to do a follow-up question, which is for the audience, but also those who will watch the video. What are the qualifications to get this kind of project financing? What do you look for, and what would be your recommendation to think very early, not the last minute, the type of qualifications?
So this is where customers really come into play. So what Decarb looks for is something called desperate customers. We want to see these corporates testing and trialing the material, paying real dollars. That's where these early revenues of these companies are coming in. And we want to see those customers pounding their fist on the table saying, we need a scaled facility so that I can launch my product at volumes that make sense for me, or put this in my supply chain. Infra, historically, really needs set volumes, set pricing, long-term. All right, and so that's where the corporates come in and need to sign up for long-term offtake with set volumes and set pricing, so those traditional infrastructure dollars can come in. I think the challenge that we have in the room, and the challenge that we want to throw out to the corporates, is they need to engage and commit slightly earlier than perhaps they historically have done so. They can't wait until everything's all set, or these companies will not be able to compete for infrastructure dollars. So if you're testing and trialing, liking what you see, you need to help these companies by stepping up and committing to volumes and pricing, because that is the game changer to unlock the infrastructure dollars. I'm also challenging our infrastructure colleagues that they need to flex a little bit where their risk appetite is before. And historically, infra was, ports and airports and, highways. And the future is all transition. The future of infrastructure will be the transition in decarbonization. And that infrastructure world is going to look different than infrastructure has looked historically. So we're all going to have to flex and think about our risk appetite in order to deliver this opportunity. And by the way, I failed to say this, talking about the dollars, that $4.5 trillion a year and the 50% that many of us in the room are investing in and helping to build. This is a historic investment opportunity for our LPs. It's the investment opportunity of our lifetime. And so that's why our LPs, even in this environment, we were able to raise $1.4 billion, is because these LPs and the pools of capital that they represent they don't want to miss out on this investment opportunity and help build that future that we're talking about right now.
It's interesting, you made me think of corporates.
Yeah.
In the annual report, they talk a lot about CO2 and scope 1, scope 2, scope 3, but there's no granularity as to how much is available just by money versus early stage projects that they are supporting to make it happen. And so I feel like there is something we should probably ask our corporates, and I know TDK is doing a good chunk of that, and TDK Ventures is bringing good projects to them. But there is probably value for corporates to signal when they invest very early in this kind of companies that are building towards an infrastructure, but they need support from corporates.
Absolutely. This should be a win-win here, right? If it's done correctly and carefully and in partnership, it's a win-win. And I think right now, it's something that we get asked every now and then. You know, right now when we look at revenues and underwrite for the particular opportunities that we look in, we don't include regulation or, you know, kind of revenue streams of the carbon mitigation associated with the opportunity. It's just, our base case is you know, just the fundamentals of the company. We underwrite to fundamentals, investment fundamentals. But there is all that upside. And when we look at upside, that's when we take into account regulation or the CO2 mitigation that might be important to those corporates going forward. And I think that, you know, one other thing to mention that's really important is when we look at the products that these companies make or what they're delivering, yes, we look at the returns. Yes, we look at the decarbonization impact. But I always say, what else? What are the other positive attributes that these products hold? I don't want the advantage to just be that they're less carbon intensive than their more carbon intensive counterparts. I don't want it to just be about decarbonization. Are these products competing on price? Are these products competing on performance? Do they have unique attributes to their more carbon intensive counterparts? So we really want to see those other positive attributes in addition to the decarbonization. These have to be great companies and great products in their own right.
Which is how they will scale.
Yes.
It has to have the right unit economics, they have to have their customers loving them, and absolutely. I want to maybe close the circle from our interview in 2022.
Okay.
Because you talked about trash to treasure.
Yes.
Can you share this concept? And of course, we have SN elements and AM batteries in the room, so clearly it's some people will really resonate. But can you share what you meant by trash to treasure and why this is a good concept for all of us to think about?
Absolutely. So, you know, it's upcycling or recycling, and you know, in the case of Ascend Elements, it's a beautiful, straightforward story, right? We want to take those critical minerals and we want to be able to use them over and over and over again, and that's what they do. We want to keep these batteries, lithium-ion batteries, out of landfill. So, and that's really what it's about. How do we keep everything at the end of the day out of landfills and turn it into, you know, reusable products, and in fact, upcycle. And that's the concept of upcycle is you're not just recycling it, but you're taking it and turning it into a more valuable product. That's the story I love about Ascend. You know, they're a materials company keeping stuff out of landfill. That's exactly what I was talking about earlier. And it's a new, improved product, right? Yeah. There's so there's that. It's other forms of municipal waste. What can you do with it? We're looking at a company right now that's actually, it sounds really basic, but it's so important. And it's a logistic company where basically they'll go to big corporates, big companies, like when, for example, say that they wanted to get rid of all these tables and chairs and get new tables and chairs. What do you do with all this stuff, right? It goes into landfill today. All these tables and chairs would just be hauled off. You know, when big companies redecorate or get rid of all their computers and do the next stage of computers. That's really logistics. It's a big logistics. How do you take this stuff and recycle it and get it to somebody else, whether it's recycled or just repurposed, or, you know, so really trash to treasure is keeping stuff out of landfill and turning it into a valuable product. Because we all know, in the fullness of time, we all know we're not going to be taking stuff to landfill. We know this is the world that we'll live in, but it's when and how do you do it and it's very, very hard, okay?
Yeah.
But I love Trash to Treasure, and we've invested in a couple of them, so.
Yeah, this is a hard thing, and like Larsen said earlier, this is worth doing.
Yes.
Meghan, thank you for your time. This was, again, amazing.
Thank you. Always good
you.
to talk to you.